All right, so I'm here to speak about cyber liability today. It's a hot topic in everything, whether it be the insurance industry, all over the news. It is permeating everything. Every day you hear about a data breach or an update on one of the breaches that have already come to a head. Um, so what I want to speak about today is really what it is, because like I said, you hear about it in the news all day long, but nobody really jumps into the details behind what exactly happened in that specific breach, what the exposures are, the reality of a data breach. This is really the scary portion of what I'll talk about. That's where I speak about the statistics and how to really make it something you can relate to. And most importantly, how you can cover these exposures, how you can protect yourself, whether it be through insurance, risk management, what have you. So the big question that I hear from most people, or we get calls on all the time, whether it be agents, insureds, whoever, what is cyber liability? What I like to compare it to is really EPL. Many, many years ago, it was a new coverage that people didn't know about, and it took a very long time to develop. Right now, cyber liability is doing the same thing. It is virtually the Wild West of the insurance industry. And insurance is a bit of a boring topic, so it's interesting to say that. But all these terms I have on here, cyber liability, security and privacy, privacy liability, cyber security, they all mean the same thing. A lot of them are proprietary terms to specific carriers. It's really, when you see these, it makes it difficult to navigate the waters of what is being covered and what is not. The history, to know where everything really started, it was created when really HIPAA rolled out. HIPAA governs the protection and the distribution of healthcare information, just basically across all industries. Doesn't matter what industry you are, as long as if you're involved in healthcare information, you have to answer to HIPAA. You have to keep it secure. There's two specific portions of that. Those are the security and the privacy rules, which really rolled out the development of that. And they deal with the governance of the security and privacy of healthcare information. The first state law to roll out, as you can see, California SB 1386 is the actual formal name, but what it did is it really put the onus on these companies to keep the residents of that specific state secure. All their information needed to be secure. It instituted certain rules, requirements, and more importantly, punishments, if that's not the case, if you don't keep that information secure. New Jersey did the same in 2006, not too far after the original creation of the rule, and it's constantly adapting. New versions of it are rolling out every day. Right now there's 47 states that have their own legislation. The only three behind the eight ball are Alabama, South Dakota, and New Mexico. I'm not sure why all three, but they're working on it. Maybe they're waiting for the federal legislation, which we've been waiting on for quite a while. Who should be concerned? Anybody that is storing, maintaining, or gathering personally identifiable information. That's that PII. You'll hear me, I'll reference that, but PII is really anything that can be uniquely used to identify one individual. Name, address, email address, date of birth, social security number, everything down to your pets' names. The reason being, it sounds a little crazy, but that information can be used to generate a password. Most people have their password as some form of their college, their pet, their kids. So having that information in combination, I can use that to figure something out about somebody, whether it be their password, banking information, what have you. The reality is, if somebody wants to get in your network, they're going to find a way, especially these days. They're much smarter than most of us are. So really, the answer to who should be concerned is everybody. The federal and state regulations I previously mentioned about the specific states have to do with more than HIPAA. If you're a financial institution, you have to answer for Graham Leach. There is high tech, excuse me, which was an adaptation of HIPAA to govern electronic medical records, because now all of our information is being transferred electronically between doctors, hospitals, and they are having breaches because they're not controlling how the information is stored. It has to be encrypted. The state attorney generals as well are all in charge of governing the privacy of the information of their residents. There's also some other federal ones, FERPA regarding the education industry, New Jersey Consumer Protection Act in this state in particular, has an involvement in the privacy of the state residents. So to go further in the state notification laws, I really wanted to focus on New Jersey in particular, because it makes it easier because we're all here. The one thing that you need to remember is you may be storing information on somebody in another state altogether. So I'm going to go through the New Jersey law, but in reality, this is just a small sampling of the requirements that you might have to adhere to. If you have somebody in your network that it now lives in PA, lives in Pennsylvania, you have to adhere to the Pennsylvania laws. And they're very detailed. They go beyond New Jersey, they go more lax, what have you. In particular, this is from the law itself. It pertains to any business that conducts business in New Jersey. And then they outline basically what PII is for their regulations. And in this case, it's your first name, last name, social security number, driver's license number, financial information, and most importantly, disassociated data. It's kind of a vague term. What it means is that if somebody gets into your network and you've got 3 separate files, one contains my name and address, another contains my social security number, and another might contain my healthcare information. If they get access to all 3, they can use that information in combination to identify me. So people that split them up between different databases, different files, if somebody gets into all of those files, then it's really on them. You know what I mean? It seems like a very key risk management measure, but being able to put the information together is just as much of an issue. The key thing about New Jersey to remember is that it's unencrypted information. So if you encrypt your files, then it's a bit of an out on the New Jersey State Code, but most information while being transferred is not encrypted. That's a very key portion to think about when you're storing your information and when your people are emailing and downloading things and just sending everything over, putting things on websites, intranets. It needs to be encrypted. After there is a breach, these laws outline exactly what you need to do. And it gets very detailed, and it gets very expensive and very time oriented. It's basically, the notice can be given in written or electronic format. This is right here the key, that within the most expedient time possible and without unreasonable delay. That's as detailed as they get as to the requirements in terms of time. They don't elaborate on what it is. They don't outline it has to be within 30 days. If for some reason the Attorney General feels that you didn't notify people soon enough or within that expedient time or without unreasonable delay, they can bring you before the board or the regulatory proceedings. It's really up to them. So what you and I may think is absolutely reasonable, they may consider unreasonable. It's very hard to control from your side. If there is a significant breach, you're allowed to post notice in what they call a public-facing forum, whether it be a newspaper, Craigslist, anywhere online that people can see it in mass. That would be if there's like very large breaches, 500,000 individuals is the number that the law uses. Also, if it'll cost you $250,000 or more. They understand that it gets pretty expensive to do all this. That $250,000 pertains specifically to the drafting and mailing of the notification costs, not to any of the other expenses you would incur to get it all done. Breaches of more than 1,000 individuals require that you notify the police and Department of Law and Public Safety and any regulators that also oversee you before you notify anybody else. So again, it ties back into that unreasonable delay. You've got to get on everything very quickly. Like I said previously, the New Jersey Consumer Protection Act doesn't specifically deal with the privacy of individuals, but under the language, the state can bring you to proceedings because of that, making it much more difficult to anticipate what can fall and what can't fall under there. Also, private and class action suits are permissible. That means basically if I feel that you didn't keep my information secure, I can come after you, whether it be individually or as a class action suit. Those out-of-pocket expenses, basically that $250,000 I mentioned, includes those notification letters that are very minimal. The other expenses that would roll out, and what I feel is really it adds up quickly, is the IT, forensics, credit monitoring, regulatory defense and penalties, call centers. These are all things that cost a lot of money, especially after a breach. You can go to a law firm that'll charge you $700 an hour after you have a breach because they know you're in a hard place. They know you have to get all this information. You have to put it together. Otherwise, you can be subject to a lot of money. Under HIPAA alone, the max penalty they can charge you is $1.5 million. While that doesn't seem like a lot to some of these large hospital networks, most companies will have to shut their doors. That's just really how the way it is. And that's only for HIPAA, not including the state fines and penalties that can be levied against you depending on where you're located, what you have to do, and what happened. The liability defense and damages is exactly that. It's really just the cost to defend yourself in the event of a breach. They add up. If anybody's ever been involved in an insurance claim, the cost of an attorney for your defense gets very, very expensive. It really adds up very quickly. And these people, especially the ones being hired by the insurance companies, aren't exactly charging $100 an hour. It escalates from there. The first party damage is also a big issue because you may not be able to function while this is happening. It's not about just the hacker. You may lose a laptop, you may lose a thumb drive, which could potentially halt your operations. If you can't make money, you can't pay for all of these expenses. And it goes into the business interruption, the loss of business income resulting from that, reputational damage, cyber extortion, cost of reissuing credit cards. The bank is going to come after you now if they have to reissue credit cards, usually about $15 to $20 a card. The theft of funds from client accounts. That is becoming a very big issue because it's more and more lucrative to not just sell this information. They just go into your bank account and they take the money, or your client's money, which is obviously a big deal. But on the cyber extortion side, I always found it interesting because it's not just a throw-in, as they say on some of the coverages. It's becoming more and more of an issue because people are thinking about it differently when they get involved in it. One big exposure out there right now is a virus that it's running on its own. All it does is it gets into your system and it spends X amount of time, sits there, figures out what you do, what files you use, and how often you use them. It goes through, identifies that information, and then at one point it encrypts it all. All these files is identified, whether they be photos, work files, Word documents, audiobooks, what have you. It encrypts all that to, right now, NSA level encryption, and then a little pop-up comes in the bottom right of your screen saying, I've done this, these are all the files that are encrypted. If you don't give me $300, I will not give you the encryption key. And you're not going to get in there. It's going to cost way more than $300 for somebody to go through your network and figure all that out. So most people are just wiring the money. $300 is a relatively nominal fee to get access to your pictures that you may not have backed up anywhere else. People get sentimental about that and they're playing on that. So people are just throwing the $300, $500, whatever it is, and it adds up. And it goes completely unnoticed because people don't want to tell anybody. They just want to pay it. It's a really new exposure, and it's something that's identifying because sometimes people just don't know what's happening. People don't report it. The reality of a breach is, like I said, this is the scary part where I like to talk about the statistics, the actual costs you could incur, basically what would come out of your pocket, like the actual numbers of it. The causes of a breach, the ones we hear about in the news all the time, are these hackers. It's entertaining. People like to hear this. It's basically a scary force out there that they can play off of in the news. But what they don't always mention is that the majority of these breaches come from problems, issues, negligence, human errors, whether it be sending an email to somebody else where it shouldn't go containing a file, losing a laptop, having it stolen out of your car. There are countless breaches that involve simply somebody leaving a laptop at the airport, or stealing a car and there happens to be a laptop in the back. All of that triggers a breach. That is something that you're supposed to keep secure, especially if the information is not encrypted. The key statistics that we like to bring up, and these are reported and updated very frequently. There's a couple organizations that update them, the Ponemon Institute, and these are all available online if you want to look into it further, broken down by the specific industries. But right now, healthcare information and financial information they're the targets right now, especially recently. Recently, as in the end of last year, they've discovered that now in the black market, your healthcare information is going for 10 times more than financial information. People are using it to create identities, medical identities, and filing false insurance claims, health insurance claims, as opposed to creating a credit card, which gets shut down very quickly. The time it takes to shut down a medical identity or medical identity theft is very long. It's something that you can really do, and you may not even notice. Excuse me. Whereas the financial information, I can shut down a credit card simply by calling my bank. And then they go and they give me the money back. The big one for a lot of people is customer churn. What that means is that after a breach, the amount of customers that will no longer come and use your business. They decide, I can use my business, I can move my business elsewhere because they're keeping it secure. There's been an increase, and obviously all industries have a different statistic or different result of that customer churn, but within the last year, 15% increase. There's been a 15% increase in the amount of people that are rethinking it. That's quite a few people. And some of the industries, healthcare information is about 7%, financial 5%. It seems low, but that adds up. When 5% of your customers decide to go elsewhere, it adds up pretty significantly. The average time to discover a breach, it says 80 days. That is really 80 days from the time somebody gets in your system and you have no idea what's going on. And then from there, you're looking at 4 months worth of time to clear out your system. That's a lot of time to be without your networks, to not function. That's a lot of time for people to go in there and take information. It's very key to you. You want to get that done as quickly as possible. To give you an idea of really how it works, because again, you only hear about it in the news. Right away after that, let's say it's 80 days, you discover a breach, you jump in there, you try to figure out what's going on by hiring an outside IT firm, unless you have an in-house IT department. They really come in there, they figure out what happened, what was accessed, what we need to do, and then from there, once you have that information, you have to select the law firm or an outside vendor that can help you put together these notification letters, figure out what laws you have to adhere to, whether it be federal, state level, or in the case of payment cards, it's basically contract. You get a breach of contract as a result of it. At this point, and this is specific to New Jersey, you would have to notify the regulators. So what you've done is you've already paid for an IT consultant, you've already started to engage a law firm and pay for that, and now you have to go and take all that information and put together a report to New Jersey. After that, those creation of those letters, notify all these individuals, offer credit monitoring, and I put in there required and voluntary because while it may cost you, or you may have 501,000 individuals where you're allowed to do the notifying on, let's say, a newspaper or a website, you still might want to notify these people to build goodwill, to avoid that customer churn. Having the voluntary notification aspect of it it's very big to basically building goodwill after a breach. As a result of those letters, people are going to call in. I was personally part of University of Maryland breach. They had my information. And as a result of that, they had sent me a letter, and they had a call center, and because this is my background, I called them up just to see how they were doing and what was going on, and they've got to set that up. They basically are estimating about 4,000 people, this is specific to the Maryland one, about 4,000 people were calling a day based on the number of records that had been breached. That's after getting a letter, after spending that money, and really just having to field all that. From there, you have to notify additional federal regulators, additional states, because again, like I said, you may not have just records of people in your state. If you've got records of people, and especially in New Jersey, we've got PA and New York, people just moving in around each state, Delaware, you've got to adhere to multiple state laws. New York, PA, New Jersey, let's say Delaware, and all of them are drastically different. Some are more relaxed, others are more secure. You've got California, Massachusetts, Virginia in particular. These are big states where the state regulators hold you very culpable in the event of a breach. It's something they pride themselves on, and we've had a lot of people in those states basically get brought up on regulatory proceedings, regulatory charges. The average cost, these are the ones that I think bring it home in terms of what would be out of your pocket. The notification costs, you're looking at over $500,000. And these are basically put together in reports every year that take a sample of all data breaches around the country. And this includes some smaller breaches, some significant ones. They remove the Targets, the Home Depots. So this includes a small subset of companies that have had breaches. This does not include those Targets, Home Depots, which are spending hundreds of millions of dollars on there to drag up the averages. The total breach costs, and what we're seeing is about $1.6 million, and this is increasing year over year over year based on the fact that it's become a business in terms of who's going to do a better job, who can charge more, who's got the experience. The average lost business, $3.3 million in lost business. That is a lot of money to lose just because you may have had an accidental breach. And that happens because people don't necessarily want to do business with you. They think that you didn't do well in responding, handling their operations. The total cost per record, this is the one that most people see, $201. That includes those lost business. It includes the reputational damage, some stuff that's hard to quantify to a specific number. So we'd like to remove all of that, those expenses that aren't really out of your pocket just yet. So what you can expect is $61 per record is the cost that you'll pay. That includes that notification, the credit monitoring, the PR, the forensics, setting up the call services. I've broken it all down here, and it adds up significantly. You can see what is relatively minimal. I mean, $1 to mail a letter, to draft and mail a letter. Setting up credit monitoring is $10 to $20. But after a breach, that adds up very quickly. Very, very quickly. And it's understanding that and who to notify, who to handle all that is key. Some claims examples. I always like to bring them home. These are all New Jersey. The Cape May Ferry is a big one. It's more so South Jersey, Philadelphia, down there. Most people go down to Cape May, or a lot of people do. This ferry is pretty, a lot of people use it. And what happened last year, they discovered that somebody had put some or implanted some malware into their point-of-sale systems where they were collecting credit cards for the ferry trip, for refreshments, beverages, food, whatever was on that ferry at the time. Any card, basically, that was used between September through August of 2013 and 2014 was potentially accessed, and they amounted about 60,000 records. And they're still going through and still finding things. It's hard to make an absolute determination when you have a breach because it takes a while to figure out what's going on. They offered, obviously, notification. They offered credit monitoring, and more importantly, they stepped up to offer identity theft resolution. So if you found that somebody had stolen your identity based on that information, they had to go and pay to recreate or to rectify the situation. For one individual, that takes a very long time and it's very costly. The estimated expenses right now, and we have to use estimated because people don't have to report it, it's also ongoing. So $750,000 to $1 million is what they're going to have to pay. And the Cape May Ferry is a nonprofit. So they don't have that kind of cash laying around outside of their typical budget and what for it is or what's it slated for. That is a lot of money, and luckily they did have insurance from what we've spoken to a couple of our carriers. They did have insurance, which was able to help them out significantly. The New Jersey Labor and Workforce. This one's interesting because they've had multiple breaches. They recently had an employee email documents containing a social security number basically to another person. They emailed it incorrectly to somebody else, and once it got out, they discovered it, and now they realize what happens if it happened again. I've got my social security number, somebody could do this, that, and the other with it. what have you. Maybe they found out nothing happened, but it's still, they've got to adhere to all these, and they have to do a lot of investigations. The same thing happened to them. Obviously, it's 2006, so it's quite a while ago, but it's an example of somebody not really listening to what the problem is. And again, it's accidental. It can happen multiple times. Estimated costs, because they jumped all over it, they already had a breach response plan in place, about $203,000. How to protect yourself. This is really, I mean, we hear all these numbers, we hear all these examples, you hear all these people that are going through it, and it's really a combination of how you can avoid it happening from your side, the proactive measures, and what you can do afterwards. The things that you can do yourself really involve just some forethought, really sitting down and thinking about what could happen and how to avoid it. Creation of an employee handbook, incorporating into your current handbook, having on-site training. It's available, just bringing someone out there to talk to your employees, making them aware of the situation and all basically the requirements that you're holding them to. Securing your sensitive data and information, encrypting those files, having them stored in a central location. We work with a company that basically bought a series of bunkers from Bell Atlantic many, many years ago, and they store healthcare information in there. So any of these clients or these doctors around the state, around the country, if they want to use this, they hire these people, and in this bunker, it's like 4 stories down, they just give them information, it's just sitting in a room. That is secure, it's one central location. It's basically, all these companies have done what they need to do to make sure that is secure. So the options are out there in terms of somebody helping you to store that information beyond the basic encryption on your networks. Properly disposing of the sensitive information. We hear examples all the time of people that throw out computers, not realizing that they have to wipe the hard drive. This happens to small businesses and major players. This happened to NASA. NASA was selling old computers, and someone found that they were not wiping the hard drives. So having that forethought to really just think about that and put a procedure in place. There's a lot of recycling places out there that will wipe the information, they'll destroy the computer and shred the hard drive for you. The encryption and password systems I mentioned the encryption. Having a password is not encryption. Having a password is only one level of how to secure yourself. Having a terminal server or a VPN, intranet, basically removing the ability to store the information on your systems, that is great. By not having the information stored on, let's say, your laptop, it doesn't necessarily have to be encrypted on the laptop. It's something to just think about as a way to control or centralize how your employees access your information. Know your strengths, basically knowing your strengths and weaknesses is key to keeping your network secure. Penetration testing is really hiring an outside firm to go in and they actually try to attack your network. They call them, as far as hackers go, there's black hat, white hat, and gray hat. These white hat hackers are the good guys, you could say. They go in there and they try to get in your network. And then they put together these reports. It costs a lot of money, but they put together these reports that tell you where you fall short. They'll make recommendations as to what you can do, and they may do it for you if you pay them a little more. Tabletop exercises. This is actually something that I had learned or I had encountered when I was down with an insured down in Virginia. These people had done emergency situations, really calling people in the middle of the night and saying, hey, we've had a breach, you need to get down here so we can talk about it. And they actually forced them into situations and figure out how they would react to this, because it's not something you can anticipate until you're already in it. So having that exercise will give everybody the experience as to what to say, what to do, and what to expect should it happen, just running through that example. Frequent updates to your systems. Every day we see those little pop-ups on the bottom of the screen saying, hey, your flash is outdated, or you need to have an update to your Windows, and we say not now, or we say later, because we just don't have the time to sit there and wait for our computer to update. Getting those patches in there, for the most part, they're all designed to help with that security as of late, whether it be to add extra features, encrypt things, basically update the security measures on there, and basically keep it more secure. Having those patches in place is key. Rolling those out as soon as you see them instead of waiting. Why not the standard policies? People always think that they have coverage underneath their commercial general liability, their crime coverage, their professional, and there may be an element of coverage on these policies, but they are not designed to protect this. Commercial general liability is designed for bodily injury and property damage. There is no bodily injury or property damage in the event of a breach. Professional liability is designed for a third party that suffers a financial loss because of some services you provided. That's not the case in the event of a breach. You may not have provided any services to these people depending on how you access the information. Crime coverage deals with the theft of assets, money, securities, and tangible goods. There's nothing tangible about data. I mean, I can't place it somewhere. There's no value to it outside of basically the black market, but it's not something the crime policy would respond to. And again, they may have some endorsements added to these policies, but it's simply an endorsement. It's not a replacement for a standalone policy. And really, that's why we're all here to learn about this type of policy. There have been many examples of companies that have tried to challenge this. Right now, actually, I mentioned Sony. They just settled the case with their insurance carrier after, I think it's been about 10 years since the first Sony breach. They've had multiple breaches on different portions of their company. They just settled with Zurich, their insurance carrier, to find some sort of coverage under their CGL policy, under their commercial general liability policy. So it took a decade for a company like that, of that size, to find coverage underneath a policy that wasn't designed for that. Companies like JP Morgan, Epsilon. Epsilon it's basically a company that's always in the background. People don't have a dealing with them. They're the ones that send you the bank cards, like the rewards cards. They send you the email saying, hey, I get at least one of these a day. Joseph A. Banks is now offering 5 shirts for $99 if you come in today to buy it all. There's a third-party email provider that sends that email out. Joseph A. Banks doesn't send that email out themselves. They go through a company like Epsilon. Epsilon had a breach that involved about 25 million records of all the customers for Bank of America, Chase, Victoria's Secret, REI, just to name a few. And what happened is they had to notify all these people, but the onus wasn't on Epsilon. The costs came out of those companies I mentioned, Bank of America, Chase, Victoria's Secret, REI. They were the ones who had to spend all that money that we referenced, that I mentioned, all the $500,000 to notify people, because the regulations are set up that it's the people that collect the information. If I come to you and give you my information, you're tasked with keeping it secure. I don't know who you send it to afterwards. I don't know who you store it with. I just trust that you're going to keep it secure and private, which is why these regulations are set or created. The limits for a policy, first, the way the policies are set up is generally there is one limit. You'll see $1 million. The standard limit, everybody basically gets to the table, to sit at the table, is $1 million. From there, there's sub-limits underneath. They are addressing the notification, the credit monitoring, the forensics, basically the terms I keep saying over and over again, because they are the expenses you'll incur. They have sub-limits for these. They need to be seen, and it may not be clear on the quote letter, which is why you need an agency that knows what they're looking at, that can help you, again, navigate those waters and figure out what is going on in these policies. The first-party coverages, so the business interruption, the regulatory defense and penalties, all of these terms, all of these coverages need to be on that policy. And really, you need to have at least $250,000 of that coverage. That's why I say, like, those endorsements that are provided on your other policies, don't incorporate that coverage. The limits may be very low. You're looking at $10,000, $25,000, which is a way that they can say they have the coverage. It's not something that they're truly addressing on there, which makes it, it's very important to get a standalone policy. The limits should address your realistic exposure. Those numbers that we mentioned, if you have 1,000 records or you've got 100,000 records in your network, it doesn't mean that you're going to pay that amount times $61. because the carriers pay this for much less. The chances of having a dramatic or drastic catastrophic breach are very limited for most companies. So getting to that $1 million really, it starts the whole process off. That's something that where most people benchmark. Going up from there, these limits are available. There's dozens of carriers that are writing this. They've all got the ability to provide higher limits if necessary, but they need to evaluate your true risk. That's where, again, where a good agent is key to really setting that up. What to look for in a carrier? Again, besides that ability to provide capacity, there's a lot of carriers jumping in. They're just jumping in because they see that they can make money on this because it's the hot topic. Having that expertise, people that have done it for 10, 15 years before it existed as it does now. Having the experienced underwriters, having the access to data breach coaches and free risk management. We have some carriers that will provide net diligence reviews. Those penetration testing costs about $5,000 to $10,000 depending on your network. People will pay for that if you're with the right carrier, with the right coverage, and really the right mindset and the experience. Having a data breach coach on hand, there's a company called Beasley. Beasley has their data breach coach. They created the position a couple years ago, and at one point it was just one person. It was this guy named Bill. Bill was there for anybody that had a claim. At any time during the week, they could call him up and he would give you an update. He would be your liaison for what's going on with your breach outside of your claims adjuster and the vendor. He was really your coach. He was there to help you and represent you. That is a huge benefit for you in the event of a breach. It's really that expertise, and they work for the carrier, but he's there to represent you outside of the normal channels, especially in something like this where it gets very complicated trying to figure out where everything is. Like I said, there's dozens of carriers that actually write this coverage and play in this field. This list right here is very small. These are only the companies that we work with and we come up against on a daily basis. Some of them you may have heard of. Philadelphia Insurance, Chubb, USLI, AIG. These are names that most people hear of, but then there's the specific carriers, the specialty carriers like your Beasleys, your Hiscoxes, Markells. Those are the ones that really, they specialize in this coverage. Not to say that these other carriers don't have a very good product. It's just something that they just don't necessarily focus on.